What's up, everybody? Welcome back to another Trades and Gains market recap. I'm your host, Max Pitts, and it was another day and another dose of economic whiplash in the markets. The market may have technically closed green, but it felt more like an awkward group hug between bulls and bears who aren't quite sure if they hate each other or not. It's kind of like how when our company makes us go to office parties and you work remote and have only met these people like maybe twice in your life, and then it's supposed to be some social happy hour. But let's skip over the niceties and dive straight into today's action. So to kick things off with our indices recap, we had the S&P 500 notch up about 0.16%. It limped higher and just barely at that. The NASDAQ saw a 0.46% push, which was boosted by Tesla, NVDA, and an AI sugar high, because apparently that's back. And the Dow, I mean, come on, what do we expect? We call it the redheaded stepchild for a reason. It closed flatter than that 7-Up that has been sitting on your countertop for about a week now. And VIX was quiet. Maybe a little too quiet, almost like suspiciously quiet. Like, is he going to show up to school quiet? Now, President Trump is playing his favorite game again. Maybe I will, maybe I won't. This time, it's about tariffs. After Monday's market rally on hints that reciprocal duties could be narrower, Trump tossed out a curveball. Like he does. Auto and pharma tariffs are still coming soon. Oh, and a 25% secondary tariff on countries buying oil from Venezuela, because nothing says economic stability like global energy chess during an election cycle, right? Market translation for this: risk on for now, but under the surface, traders are hedging like hell. Now, over in the consumer confidence land, America's mood is absolutely in the shits. The Conference Board's Consumer Confidence Index dropped to 92.9, down from 100.1. That's the lowest reading in over 4 years. And the expectations index is now at a 12-year low. That's not a yellow flag. That's a massive red banner waving from a recession hilltop. That's kind of like when the guy you met on Tinder says, "Hey, you want to just pick me up maybe?" or is always trying to come to your house. It's a big old red flag. Maybe that man is homeless. Maybe that man does not have a car. Anyways, consumers are worried about the following things. It looks like they're consumed by higher grocery prices, layoffs occurring, and tariffs wrecking prices even further. So even though stocks were up today, people are bracing for impact. Now, over in options land, where we allow Investor Central Club to break down some of our most notable news, let's go ahead and talk about our big money mixed bag that occurred today. First things first, in SPY, we had 45.88 million in total flow, with 14 million in calls against 31 million in puts. And our most hit contract for today was the April 4th 565. We had a couple big money filters of about 4 million into change that flowed into this today as well. Our next big guy is going to be NVIDIA with 25.42 million in flow. Overall, a bullish flow for this, with 16 million in calls against 9.4 million in total puts. It was mixed, but it's still bullish. It's a strong AI narrative here that people are still supporting, and that $120 contract expiring on the 28th was our most hit contract of the day. Now, looking at Tesla, we also had 23.65 million in total flow, and it was heavy on calls, and this was helped by China FSD headlines hitting the tape. So we have the 280 strike calls that were the most popular that are expiring this week as well. So it looks like people are playing into those weeklies and are extremely bullish on Tesla after that news. We also had Meta with 9.8 million in total flow, with 7 million in calls against 2.79 million in puts, with our most common contract of the day being, and they're all golden tickers, by the way. The $600 strike with a 3/28 expiration. Again, those are some high premiums that were hit there. That's just what the news is, though, folks. Sometimes you got to go with it. I don't see any of us buying a $25 options contract, though, and I'm talking $2,500 a contract. Anyways, last up, but most certainly not least, we had QQQ with 9.61 million in total flow, with 7 million in calls against 2.5 million in puts. And our most common contract were the 505 calls that are due on the 4th of April. Now, SPY dominated our flow per usual. What else is new? But the call to put ratio is one of the highest we've seen in weeks. It seems like bulls are front running Friday's PCE print potentially. And Tesla, call flow surged after announcing its plan to activate full self-driving in China once it gets approved. Again, this was something that was put on the table quite some time ago, so it shouldn't be new news if you've been following the channel. Add that to easing tariff fears, and Elon's got another 3.5% day in the bag. And MRK, that was all puts. It was crazy. So someone's either betting on a healthcare shakeup or bracing for pharma tariffs. Now, in our dark pool area, let's go ahead and filter our dark pools for you guys. So over in dark pool land, we had SPY with 224 million in total dark pool prints from Form T and QCTs. Microsoft, we had 500 million in block trades. Meta, we had 184 million at 4:06 p.m., which was near its highs. VUG, and EFA, institutional rotations in ETFs is continuing, and that's something we're seeing from the whales currently. And SPR and USMV each saw 195 million plus each, which is a defensive posture, is still alive and very much active in the markets. The VU activity suggests big players are not abandoning equities, they're just rotating and hedging. Think silent shifts, not a mass exodus. Now, moving on back to look at some of our highlights for the day. We got GameStop, which added Bitcoin to its treasury. CFOs everywhere just collectively rolled their eyes, but the stock is up 6% after hours. Is this a earnings move potentially to make earnings go better for them? I don't know. We're going to have to wait and see. Trump Media popped 6% after partnering with Crypto.com to roll out ETFs because, well, obviously, because he's so pro-crypto, right? Carvana jumped after Morgan Stanley said it could be the Amazon of auto retail, which is, hey, that's cute. That's nice. That's like saying you got really nice feet or something, an obscure comment. Tesla is bleeding in European EV sales, down 42% year over year. Ouch. But the bulls don't give a shit. It's America, baby. We don't care about that stuff. They're jacked on China opium right now, or China's hopium of that FSD getting final approval. And Fed's Kugler said rates are staying high for some time. I think we all saw that coming, so no shock there. Now, for our macro wrap, recession, maybe. Vibes are definitely bad, though. The Fed's inflation fight is still ongoing. The tariff narrative still driving headlines and sentiment. Consumers are maxed out, and confidence is starting to crack, and corporate earnings could get dicey if tariff fallout worsens. Friday's PCE inflation report is the next boss fight. Until then, it's all vibes, options plays, and scalping the fuck out of the market. This market is like a toddler full of sugar and uncertainty, sprinting one moment, crashing the next. Big money is playing both sides. Dark pool prints are very much active and alive, and headlines are confusing enough to make your head spin. If you're long, tighten your stops up and be careful. If you're short, keep your head on a swivel. The April 2nd tariff circus is coming, and everyone's just getting into the act. That's all we have for today's podcast. I hope you enjoyed this. If you got anything out of it, make sure you like, subscribe, and hit that bell notification so you never miss a Trades and Gains market recap. I'll see you guys in the next episode. Thank you for showing up. Stay diligent, stay safe, and I will see you all tomorrow for Market Open.